Good morning. Good morning. All right. Good morning, everybody, and welcome to another week in the equities
Good morning,
markets.
everybody.
And welcome to another week.
You're all set.
Good
morning,
good to go this Monday morning. So, another week.
As
You're all
always,
set.
my name is
Good to
Jared.
go.
This is Engineering the Market, and it is March
As
7th.
always, 2022. Let's start off every week like we always do, which is just marking off our expected move for the week and discussing the week that was. So last week, the S&Ps, for the most part, traded slightly under the previous Friday's close. We basically saw a marketplace that decided to underperform overall, and we did close the week slightly down in most indices, including the SPX. So from the perspective of our expected move, the question would be, did we do anything that was out of the pricing model of the option market? And the answer basically is no. We saw about a 126 expected move last week. The marketplace from midline to the lowest print moved about 105 points. So that's about 83% of the entire expected move. We stayed within. We had no breaches overall. So ultimately, an inside week for the market. And this is, of course, amidst all of the volatility we've been seeing on an intraday basis. It's notable to understand that each of these intraday candles is roughly about 10, or in this case, 100 SPX points from high to low. So it's a lot of intraday volatility. It's been some pretty fun trade if you can identify those trends early and essentially ride the momentum for anywhere from 50 to 70% of the total intraday range. Been a lot of fun overall for day traders and kind of keeping the volatility in check and some of the expectations of the market in check. Now, moving into this week, we do have an expansion of the expected move. This is often a bit of a rare situation whenever you do not have a breach on the previous week, because essentially the market is saying that even though we were in line last week, amidst all of that back and forth trade, the market is anticipating even wider expectation of movement. And some of this is understandable. We still have large geopolitical risk, basically the same picture here, but some new developments overall in some of the particular markets we're going to take a look at. But additionally, we're seeing elevated volatility continuously not backing down. And some of this volatility is going to reflect in key underlyings. It's also going to reflect in the SPX. So for the week, 145, 146 expected move. That brings our top side to about 44.74 and our downside to about 41.83. Now, I'm going to quickly bring up just the 200-day moving average, which is this red moving average that I have on my chart currently. We've seen oscillation between these levels before, so it's not necessarily the most clear support and resistance moving average that we have. In fact, I would argue that the 20 so far has kind of continued this relative downtrend and has kept the S&P at risk of a fresh low. But if we do see a topside test this week, and that is something I will be looking for as some additional information maybe comes out from CPI data Wednesday and Thursday, along with any developments in the Russian-Ukrainian situation. If any of that is treated as more of a positive for the market, I will be looking at this topside expected move and a test of the 200, which would, in the short term, invalidate the most recent swing high, the lower high that's been printed last week. But additionally, possibly set up the higher low scenario against the absolute low of February 24th. This is still our large range and large scale reversal candle for the market. It has not been breached. It has not necessarily been tested at the low. And what we're looking at right now is a lot of volatility trade in between this approximate 4250 to 4400. It's a range that the market likes to trade in for higher volatility price action. We get lots of back and forth trade, and it has already been seen last month. So it's not surprising to see this elevated volatility between these price ranges. What we're trying to interpret now is, are we going to break from this range at any point? So let's start off our discussion this week by talking about what's on deck. And it's remiss to not talk about what's happening in the crude market as of late. If you recall, last week, we were looking at crude. I'll take off this intraday price. And just looking at relative pricing here, let me take off any particular studies. Just want to look at sort of pure price levels. Crude has had some major developments over the past couple of weeks. For one, this particular run-up in crude has been a full range transition for the active contract. So a technical trader would say that if you're able to find yourself back into a trading range, oftentimes you will transition these trading ranges as you did back in time. These ranges are, of course, set by historical price levels, but from a technical sense, they often represent the support and resistance that remains in the market. It showcases when things are overbought, oversold, and typically you get some counterplay at these price levels. Now, as we opened on Sunday evening, crude did open up at approximately 130. And if I'm just looking at Forest/CL, we are seeing currently a bit of a fade from that opening print. So just in the sort of intraday short term, the crude market is coming back to basically address some of this gap up that we've experienced in the opening session. Obviously, still a major risk off signal for certain parts of the market. It's not necessarily the most bullish thing in the world to see energy climb like this. For the equities market, for consumers, you're obviously going to be starting to feel this more and more at the gas pump, as we see gasoline has exploded as well to the upside. So all in all, this is affecting basically, the consumer's pricing power. And this is another, sort of signal indicator for incoming inflationary pressures for the market. We've also seen other key products. Let's see, it's wheat. This was a trade that we discussed very briefly last week. A lot of traders in the room actually took advantage of some of the ETFs that were in play, most notably the Tucrium ETFs, WEAT for the wheat breakout. And this is a very clean, just technical chart. Channel breakout, tons of volume, tons of volatility. And even as an intraday trader, we're looking at, about $2 ranges on a product that you can easily define 5 to 10 cent risk, depending on your aggression level. So plenty of opportunity in these products. Want to be cautious, though, of the overextension. This is starting to affect a lot of these particular names. And while these topping patterns don't have to necessarily set the absolute high, what often will occur after these more parabolic moves is a period of chop and consolidation. And if you're looking just pure directional overall, these consolidation phases are actually quite challenging. Typically, you'll get wild swings in both direction with a clear high. And in the case of maybe a bullish consolidation, you'll actually be printing lower lows each and every time a bullish swing comes into typically a pennant or a retracement pattern. So as the market is getting overheated in some of these products, the volume is certainly indicative of a blow off top. Watch out for these consolidations. The volatility itself is already very high. Just for perspective here, these ETFs are seeing on the tune of about 20% downside in a day from their absolute high. So these are like quote unquote bear market readings in the course of a day. This is how tops tend to be formed in the market. We'll be looking to see if that also takes place in crude. Different, obviously, factors, different economic rationale for this run. But if you're looking to get exposure in this market, there's quite a few ways you can go about it. For one, if you're looking intraday, there are a couple of leveraged ETFs. For example, Gush is going to be the bullish. And this, I believe, is still a 3 times leverage. So definitely a lot of beta exposure. If not, it's going to be 2 times. And then if you are looking at the counterplay, let's say you believe crude overall has topped, and you believe that moving forward, it's either going to be a little bit bearish or basically just a lack of follow through to the top side. Drip is going to be the alternative. Keep in mind that this one may experience a reverse split in the coming weeks. Typically, once they breach below 5 on these leveraged ETFs and ETNs, you're going to see them reprice in order to kind of keep the trading volume and liquidity levels a little bit easier to manage by the market makers. So those are 2 products that you can look into. USO as well, just kind of that clear cut, not one-to-one, but it is a fund that's going to hold some of these futures products. This one does have a bit of decay built into its prospectus and its term structure of the ETF. So understand how this product is built if you're looking to hold for typically multiple days to weeks. But overall, the trend is definitely bullish. And of course, if you're looking at a topping action inside of crude, just be aware that this one could fade equally well. And then last but not least, if you're a futures trader, maybe you're looking at CL, but there are some sort of pros and cons here. For one, if we look at futures trader, margin requirements on CL are not necessarily for the faint at heart. Every single 0.01 move in crude represents $100 sort of adjustment. So, for example, this particular gap up, which is a $10 gap up, has been about a $10,000 basically upside move. And additionally, the margin requirement itself is quite high. This is actually off just by the numbers here. So for one contract, about 23,000. Oh, yeah, sorry. It looks like the tick adjusted as well. So it would be, okay, it was just a $1,000 up move in crude. No, it's still a 10,000. Sorry, my math is off this morning. But anyway, so crude is definitely going to be sort of your big boy product. If you're wanting some exposure, you can look at QM, which is about half the exposure of /CL. Instead of 1,000 barrels, it's going to be 500. And then if you're looking to go even smaller, you can go to a micro product. There is micro crude oil futures available. This is a relatively newer product provided by CME Group. But once again, you're just reducing things down into a level that's more manageable for your account size. And the whole idea here is that if you're wanting exposure, maybe you don't necessarily want a product that's more of a derivative or isn't quite tracking this particular volatility the same way as the actual futures. You can see now these are already down to about 120. So this sort of morning fade is both playing out along with how you get exposure to it, just offering a couple of different products here. And just to showcase, the move looks equivalent here. We're just seeing, different overall products. And of course, all of these products are fairly liquid. There's really no trouble getting filled. Just worry about the spread maybe in the evening sessions, as these do have different periods of open and close. They actually have some pause periods in between. So take a look at these products. If you're looking to get some crude exposure, but you're not necessarily going out and buying oil stocks, this is a more direct way to get some of that into your account, into your portfolio. Now, speaking of oil stocks, it's worthwhile to talk about one of the strongest oil stocks from last week's session. Now, what's so great about this market is it was essentially obvious that crude was in play last week. And no matter where you decided to gain sort of that long exposure, you're probably a happy camper. Whether you went to XLE, XOP, these are all just classic breakouts. They all have plenty of bullish behavior. Maybe you went to some of the sort of smaller companies, APA, Marathon Oil. These are all uptrending stocks. They're all great in their own respect. They all have the technical reason to be thinking long. But I wanted to talk about Oxy because overall it looks a little different. And of course, when looking at trying to gain maybe a little bit of bullish performance, you want to be able to find the best of the best, because a stock that moves anywhere from 45 to 50% in a week definitely has eyes on and attention built into this move. So let's discuss what happened last week. Why was Oxy so much more bullish than the rest of the oil stock market? And why did it outperform amidst the heavy hitters like Chevron, also very bullish, and Exxon, once again, new relative highs? So in order to explain this, we need to go back to expected move. And no matter how you decide to visualize this, I'll do it sort of in the most direct and, let's say tool lacking kind of way. I'm going to be looking at Oxy on the week that was, which was, let's say I'm opening around Sunday of last week. So Oxy has pricing in its option market relative to the week ahead, which ends in March 7th. So I'm looking on Sunday, I'm doing my sort of weekend prep. And on March 7th, Oxy, shifted my ticker there. Where is, oh, sorry, March 4th. Still morning. I'm making a couple of mistakes here, but y'all are following along. Okay, so Oxy on the week priced in about a $2 to $3 move. We'll just say about $3 to the top side. It's getting attention in regards to what's going on in crude. And obviously people are looking for exposure. They're speculating some companies have an edge over others, whether they're refiners, producers, what sort of overall portfolio and exposure to different countries they have, where are they getting their oil products, et cetera, et cetera. But let's just look at this pure and natural in regards to what did the option market say? They said $3. Now, Oxy at the beginning of the week essentially closed on Friday at about $38.50. So a $2 to $3 move to the upside puts us, let's say, at 41, maybe at a max 41 to 42. That's going to be what is typically seen as a breakout in regards to the expected move, a breach. This is what we talk about in the SPX all the time. And the goal here is that the option market tried to price in volatility on the week ahead. They got it wrong. On the first day, Oxy, of course, made a massive technical breakout. It's a swing low into a new swing high, a pullback buy off the 20, whatever you want to use. Obviously, Oxy's moving. So first day on the week, Oxy is already outside of its expected move. So the volatility is rising overall. The option market's trying to play catch up. The next day, Oxy gaps up, Gap and go, basically a runaway style gap. This gap does not fill. The option market is still playing catch up, but the equities market is moving ahead. Now we're already at about 47.48. Remember that the expected move on the week was only about $3. So even at 47 to 48, we're looking at about a 2 to 3 time outside expected move. This is massive in most scenarios. This is usually where the probability model for the expected move allows you to play fade type strategies, essentially playing back down to normal levels or statistically more probable levels. Additionally, any particular market maker who has sold options in Oxy is starting to hedge their portfolio because they are the sellers. They are the ones carrying net negative delta exposure, especially on the call side, and they have to go out and buy shares every time the price appreciates against their position. We've discussed this a few times. It's the idea behind delta hedging. If you're not familiar, please look it up and we'll discuss it more throughout the week. Now, Oxy over the next 2 days wasn't really in play. From an intraday perspective, we had some range. There certainly was sort of a relative topping action starting to form, but we never really broke a technical low. We didn't get below these indecision candles, which for most sort of counter trend players is going to be the signal or the trigger for their short to begin, basically to enter into a position. And then finally, on Friday, the day where this particular series has the most exposure, specifically from the gamma side of the option market. This is where these short dated contracts will move the fastest. They're the most aggressive. And we're already outside of expected move by 2 or 3 times. Now the market is primed in such a way that if we get another breakout, and we saw this in the early morning session, even if you missed the initial run, there was plenty of opportunities throughout the day where this market just took off. And because of this dynamic in the option market, not only did it have the fuel or the, I would say, propellant in order to keep this move going, but this became essentially a gamma related squeeze. The option market was driving a lot of this buying volume. And this was buying into buying. This was hedging into hedging. It was very challenging to find not only short opportunities, 1 or 2 on the shorter time frames. This one was decent. But overall, the dynamic here as this move started became one of basically the model being broken. This is where the rubber band snaps. The pricing is based around something that's already built in to the supply demand model of the option market. And what's happening here is market makers are covering their net exposure. Imagine if you're someone who sold, let's say, 1 million calls in Oxy. Now, whatever delta those calls had at open, you are now net short that delta. And as the price of Oxy continues higher and higher, you're having to buy more shares to protect yourself against what is now pricing in as higher delta risk from the gamma aspect of the fundamentals of options. So it's an explanation as to why this was so volatile and violent to the upside. And if we look at some of the option market today, we can even see that some of these models are still in place in regards to, we have some of the highest IV over the past 52 weeks. We have a lot of calls, not even necessarily that much, but just a relatively higher amount of calls, about 1.5 times over the past 5 days. This was on Friday. And then if you look and see in the option market currently, this is actually an update, but as of last week, there were no more strikes above 70. So the option market not only got the expected move quite wrong, but had this been more violent, had this been sort of a 60 breakout, 65, the market, especially on the option side, wasn't ready to go above 70. They didn't have any strikes above there. So as this continues, they're obviously trying to rein this in with implied volatility. It's above 100 at this point on the weekly series. And a lot of people rolled their, essentially their perpetual gains for the short dated calls into the next series, expecting this to continue. Are we going to see some topping action? Probably going to be dictated by crude. But understand that these sort of consolidation breakouts can fuel the dynamic hedging that's already baked into the market. When you're trying to top tick these short opportunities at whole dollar levels, usually what's happening and what you're fighting is market makers. You're fighting their sort of algorithmic buying program to keep their portfolio protected, basically to keep them delta neutral. So it's not necessarily that you're out there fighting mom and pops who are buying into buying. You're fighting essentially the people who provide liquidity for the market. And it's such a challenging thing to do at these upper levels because essentially markets don't have to do anything to fade. They just hold on to their core positions. Essentially in the call buying side of the market, these are already in, the buyers are already in, and what's going on right now is just the protection side, the hedging side. So all in all, great opportunity last week, very likely to be volatile this week. Definitely going to be on the watch list probably for the rest of the week, just until we kind of see this resolve and what the next phase of the move looks like. But as I mentioned, keep an eye on crude. It is fading this morning. We're starting to fill this sort of blow off top style gap, and how this market kind of forms will dictate some of, profit taking, potentially some of this unwinding, and this will affect a lot of key stocks, especially in the energy market. So, last but not least, there's a lot of these setups forming in a lot of risk off type assets. Gold has hit 2,000 in the active futures contracts. Once again, little toppy overall, maybe not the most attractive fading candidate, but it is something that might consolidate moving forward. A little bit of profit taking, especially if we get some catalyst news in regards to resolution. So crude, certain commodities, gold, keep an eye on these. These are not typical day trade style products, but they're in play. And just like every market, you play what the market is giving you at the moment, regardless of your bias, your sort of future expectations, what's been working versus what's working now. These are all opportunities for the market. So for the week, we'll be looking at some different ways to gain exposure to these products, but just understand that they've already been in play for quite a while. This could be sort of the beginning of the consolidation phase and the beginning of a larger sort of drawdown in these products, assuming that we get some resolution. So last but not least, keep an eye on VIX this week. We have CPI coming out, but we're still in a above 30 environment. So play things conservative and understand that the moves are bigger in this market. You don't have to be sized in as heavy. You don't have to be as tight of risk. You're getting larger moves. So allow the position to mature if you're in the right trend. And until this sort of changes, this has been what's working. You don't have to be heavy. You just have to be in the right direction. So all that said, my name is Jared. This is Engineering the Market. Trade safe. We'll talk more tomorrow, and stay tuned for pre-market prep.
Okay, there we go. Sorry about that. Had myself on mute. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone is having an amazing morning. Hopefully, you guys had an incredible weekend. So, guys, over on YouTube, big thumbs up for Jared bringing us in this morning with engineering the markets. Again, amazing job he does there. So let's give him a big thumbs up over on YouTube. All right, excellent, guys. Let's get started on another week that is sure to be nothing less than interesting, as we have seen with the markets over the last couple of weeks. Again, a lot of volatility, which has been great for us intraday traders. Some of it was not with the best news and catalysts as we've seen, events going around the world, but hopefully, things can start to smooth out. Um, Nevertheless, let's take a look at our pre-market gappers list this morning. We have a lot, both red and green today. So we can see here a couple of names, BBBY, not to be confused with last week's BBY, which was in play on earnings. This one is up 83. Wait, is that right? I just noticed the percentage on this BBBY up 83%, 85%. Wow. Wow. That is massive gap up there, guys. We'll take a look at what's going on there. A couple of low floats coming in this morning, a ton actually compared to what we really haven't been getting a lot of low floats with a lot of the liquidity volatility we've been getting the last couple of weeks. But a couple in here. We know Indo is just really insane. It has been for the last couple of days, up again today, this morning. And we'll take a look at whatever else is on here. I see Uber probably earning. Actually, I did see this on my little cheat sheet that our friend sends over every morning. We appreciate that very, very much. All right, guys, let's take a look at a gap down list. Gap down list this morning. We are looking at a couple of names here that have been in play. United Airlines, some airlines here taking a hit. United Airlines, American Airlines. So looks like that travel sector is not doing so well this morning. Billy, which was great last week on a couple of plays, and some EVs companies here as well. So we'll definitely get into all of that this morning and see what's happening there. So I believe Norm today is off a couple of days this week. I will have someone covering in just a second here. I'll get them a link if we can. Looks like Jared might be able to jump on. We'll see if we can get him that link in just a second, guys. Here, just so let me get that for him. Let's just open this up here. And then Jared, or if Jared wants to get a little break from this morning, maybe Peter or somebody else can join as well. But let's go over here. Let's get the link posted, and we can go from there. Let's see here. We're looking at Norm's number 9. There we go, 941. Perfect. All right, excellent. Let's get that over here. And there we go. All right. As that is happening, let's go back. Let's start looking through our list, guys. Let's see what we can find. I'm going to remove the stuff from yesterday. Control A, Control X. That takes care of our watch list there. And let's go ahead. And what I'm going to do here is let's link our trade ideas. I have not done that this morning. That helps us move a little bit faster here. If you want to know how to do this and you have trade ideas, you have your own tools, you can come to tools here, external linking. You're going to get this little pop-up here. Very, very easy process. It's a lot of great features. Click on add link. It's going to bring up this other pop-up. And then what it says here, just kind of scroll over. What's that again? Scroll over your mouse where you want this ticker to be populated. So you can do this really on Dash Trader Pro, Thinkorswim, or any type of platform that you're using that you want to link over that information over. So just hit Shift, hit OK, and then there your montage now is linked to whatever you have in trade ideas. Oh, minimize everything. Let's bring that back. Trade ideas, we need this, and we need this. And now when we click here, you'll be able to see those charts populate on your montage. So, all right, let's start. Jared is in. Good morning, Jared. I don't hear you yet. I don't see you connected. Just double check that. But in the meantime, we'll go through this list. BBBY this morning, guys, up huge. I missed this. It's actually it's on the sheet. I missed this one. BBBY. Here we go. So let's take a look at that one. Guys, it's just incredible volume today. 13 million shares traded. So again, heavy volume on this one. Definitely in play this morning. We'll keep it on here, guys. Just a huge pop today. Here we go on MARPS. This one is up 40% right now. 813,000 shares traded. What what kind of stock is this? I mean, it is marine petroleum. Okay, this is an oil, another one of these oil companies, which by the way have been just doing very well. We see Indo, we see some other ones on here, XOM, Oxy. They've been very, very active. So this seems to be another one on the list. Not the best pre-market activity just yet, but that can get pretty good in a couple of minutes because just this whole oil thing is hot at the moment. So I'm not gonna add it to my list. I will be looking at though Oxy. I think that's one of my favorite ones. Look at the week we've had on this one, guys. So that is looking really good there. I'm gonna add Oxy to the list this morning. You can look at other ones as we mentioned in the past before, XOM and some other tickers on there you could take a look at. I'll add Oxy to my list, 2.5 million this morning. Indo is definitely in play. This is again a more riskier play here, but they're up 15%. Look at the last couple of days as well. Some really big pops here on Indo, so we'll put that on there. As well. Heading down, a couple of low floats here. We have Mars, which we just looked at. KL XE on deck here as well. This is up 19%. Volume is just too light for the most part right now. Hey, there you are, Jared. How you doing this morning, my friend?
Not too bad. I just reset the vmix and I think that did it. So can you hear me?
Oh, loud and clear, man. Loud and clear. Excellent. All right, so we're just going through our gappers list, see what we can find here. Indo we have on deck. KLXE, as I mentioned on this one, just very light volume, so not great. CNR looks like a buyout, guys. Doesn't look great. You have this initial pop and just moving sideways with some heavy volume, but this is typically not what we want to keep on deck. Heading down to MXC. This one, a little more volume, 265,000. Another energy company sitting on the American Stock Exchange. No shares for sure. I'm always just concerned with trading the ones on the American Stock Exchange. So I'm going to keep that one off my list for now. I think we'll find something better. We have Oxy we looked at, definitely in play. AU, a couple of other gold tickers in here that you can look at. Silver as well. CTRA, no volume there. It's just we're getting a ton. And as we're pushing through here, you can see the list is growing, right? The list is growing here. So see, Peter's now on and Peter froze. All right, when we have, I want to look at plug. Plug is interesting, maybe a possible, not the best pre-market activity, but definitely want to take a look at that one. Fuel cell this morning. What we got going on here? Fuel cell. I know this is an active one and many people like this one. I'm not seeing anything great as of yet. That can change. We'll have to come back to that one. I want to get to Uber, guys. So Uber here, we got some good volume, 964,000, up 2.3. Oh, now Jerry's back. There we go. See, you're getting a taste of everybody this Monday morning as we get this week going. So
yeah, that was a little funny. Peter jumped in and he took over. Yes. He dominated the vmix.
He hopped you off there for a second. Yeah. All right, so that's what we have. It's a lot in our gap up list this morning. I picked a few that I am interested in. Let's take a look at our gap down, starting with Gilead here, which again, very difficult stock to trade. I normally stay away from this one for intraday trades. I know it can get very active. This morning they're down 4.7, so not great news. They had not earnings. I don't know what's going on with these guys this morning. UBS, no. See, this is not a great pre-market activity. We do have a nice drop, 4.3, but not a great pre-market action. STLA this morning, not looking. The day looks interesting, but looks very choppy, almost foreign. I think this might be a foreign ticker here, by the way. It doesn't look all that great. Yes, so it's a lot of, what are these? These are oil companies probably. Well, no, these are finance and insurance. So a lot of finance and insurance, manufacturing type tickers are in here. Usually these tickers, guys, don't trade very well. We do have some travel companies like United Airlines, American Airlines. They're here as well. And they are not happy with everything going on. Obviously, look at American Airlines, United Airlines, the last couple of days, taking a real nice hit here. They're down again, 3.8. So I like United Airlines. I know American Airlines is on the list as well. We're going to look at that one here. We'll add it to our possible list. How about CCL? CCL doing anything right now? 921,000. That's good volume. I think it's worth adding as a secondary to that. I think today they might be in play. These tickers looking pretty active as far as volume this morning. All right, we'll stop here. There's definitely a lot this morning. It's funny how you see some of the companies are doing well with everything going on. It helps them, and some other companies are not doing well with the stuff's going on. Kind of like similar to what we had back in the pandemic, where you had these companies that were that type of situation do horrible, and you see them tanking, and then you have other ones that start doing well. You see them popping up. So,
Mhm.
Jared, I know you might have gave already an overview of the spy, but if you could do a quick one now, and then we'll come back and start looking at some of these tickers we have there. This is normally normal to do this, but since you're covering, we'll put
Sure.
the ticker up here. Yep.
Sure. So, key thing here is that the S&Ps are still in sort of their relative downtrend. Lots of sort of anticipation as to what the next big move is going to be, but overall, there is a volatility range that has been in place since late January, roughly 4 to 80s on the SPX or 428 in the SPY, and to our most recent spike high from last week. So this is a volatile range. The intraday play is very attractive, but understand until we get a very clear breakout or breakdown, this is likely to continue. And we're just seeing the VIX and other sort of risk indicators continue to be elevated. So looking for more clarity, especially from a directional sense, and what the next big move is going to look like will depend on how we get out of this range.
Yep. Thank you very much, Jared. All right, guys, let's get to our list here. 1 second, I lost my slide. All right, sorry guys, something froze here. Can I switch over? Okay, there we go. Perfect. All right. Let's get it all hooked up here. There it is. CCL. And is our montage working today? It was. Okay, perfect. All right, so guys, going back to our list, this is what we picked off so far. BBBY, amazing. I mean, this thing is up 102 now. I mean, it is just crushing, guys. This thing opened up at 17 today, up at 33. So just insane. We have Oxy and we have United Airlines, which I like right now. And then we have a couple of other ones at the bottom. Jerry, before we get to the chat room, anything that you like on your end this morning?
I'm going to probably be focused pretty heavily on energy stocks today. I do
Mm-hmm.
believe that crude futures have at least formed like maybe a weekly top, and I am looking to either fade or trying to find some profit taking sort of signals on some of these key stocks. Watching Oxy from last week for sure, it was the probably the most outperforming stock in the entire S&P 500. So why not have it on the list? BBBY is definitely attractive. I've already seen a couple of of opportunities missed in the pre-market, and I don't mind looking at some of the travel stocks because I do see the pressure of higher gas prices kind of affecting their bottom line. So the market may be pricing that in today, especially if there's a technical breakdown on the charts. So.
Yeah, agree with that. Yeah, I like travel today. I got United here. I have some of the other ones as well in our secondary list, but United is usually one that I like to trade. It looks good this morning. Also, the daily on this one looks very, very nice. All right, guys, let's get to our chat room here. Let's see what we have. If it's already on here, we will be taking a second look at it. So I'll skip on those if you mentioned it. AA looks interesting. I know Brian was trading AA last week. This is Alcoa. It can trade very well. You can't really go by the pre-market action on this one. You really have to wait for the market open. You don't get a whole lot of volume pre-market, but at the market open, it has been. You've seen some action. At least we saw last week, and I know this is one that Brian keeps a close eye on. So we'll wait for him to see if he's going to keep it on his list today. I'm not going to have it on my list. It's just not a ticker that I like to trade the way it moves there. So I'm going to skip on it. BBBY, definitely on deck, guys. So thank you for mentioning that one. I mean, it's just insane. Baba, let's go to Ted. Ted is giving us Baba this morning. Yeah, Baba looks good. 2.1 million shares traded. So they definitely got some volume here on Baba. We're going to add that one to our list today. They can trade very well. Pretty much flat as far as gapping up or down. This is why it's not hitting our list here. But yeah, Baba could be interesting this morning. Great pre-market action, some good volume there. AA is good. We're gonna put it. I'm gonna put it here. So if I do speak with Brian, we can ask him what he thinks about AA if he's not already watching it. Joseph, you're giving a CNR, and this one is gapped up here and pretty much flat. This looks like a buy, right? You got 3 million shares traded. You got this one initial pop very, very early on, and then nothing happening after that. So unless we start getting some dancing around here, this is something that I probably won't be watching. Now, guys, keep in mind that when we're putting this watch list together, we're also taking, like when usually Norm and I do, or even when Jared does it, we're taking into consideration the way we trade. So can this be a great trader today? Absolutely. But I'm also taking into consideration my style of trading, and this does not fit my style of trading, right? So you're going to find things that we take off our list that might be your best trader of the entire year so far, right? And that's great. But keep in mind that you have to look at it from your lens as well and the way you trade. So very, very important. We will never tell you, don't trade the stock or take the stock off your list. You have to do your own analysis and assessment when you are building your watch list. Very, very important. I'll tell you, I will never touch that with like Norm says, with a 10-foot pole. I will say that, but it doesn't mean you have to do that, right? So very, very important to have, when you're part of a chat room, part of a community, there's so many positive things, but if there is one negative thing, the one negative thing is following someone. When you do that, you are most likely not going to succeed. I guarantee you that, right? So definitely keep that in mind. All right. With that said, CNR, no good here, guys. We'll skip on that one. Let's take a look at NEO today. NEO this morning. Yes. NEO is in play, guys. 1.2 million, down 1.8. Love this one. I'm going to add it here to our list. Actually, this could be on our main list today, I think. That's looking much, much better than these secondaries on there. Heading down here, guys, what do we have? BBBY is good. GME, anything going on there with GME and AMC? Not moving right now, no volume. I'm not sure there's anything overall happening there.
Not at the moment, but the news with BBBY is related to Ryan Cohen, and that's going to have sort of a sympathy sort of analysis with GameStop potentially. So obviously BBBY is the leader right now. Definitely want to trade the one with the volume. But if BBBY does consolidate or slow down, maybe even top out, maybe shift your focus into these other stocks that are related to this particular news catalyst. It can provide a secondary opportunity.
Yeah. Heading down here, guys, we'll take a look at, let's see what else we have. Oh, that covers all over here in our chat. Let's see over on YouTube. What do we have, friends? Pfizer, so PFE this morning. No, it's pretty quiet right now. As far as volume, I don't see a whole lot going on. I know they're a New York Stock Exchange, right? So their volume could be very light in the pre-market, but I'm not seeing anything that puts them above some of the stuff that we have really in play that are moving good this morning. Joshua, yeah, gold, silver, all that is not in play, but it's definitely active, right? You can keep the eye on those tickers. I usually don't watch those tickers, so I'll keep them off my list. JHVALE. You're getting a pop of 3% here with some decent volume, right? 715. This stock, though, I do find it very difficult to trade. I think it can be choppy at times. So for that reason, I'm not going to have it on my list, but they got a nice pop. You look at their daily, they look great. It's just their intraday action and their price action could be a little funky at times. But if you have space on your list, you can definitely watch that. I'm looking at my list and I'm looking at, the ones I have already. These look really, really good. So we don't have to search too far and wide today. I know both our gap up and gap down lists are huge, but there's a couple of tickers that are sticking out pretty nice this morning for the way we like to trade here. Even Tesla today looking good.
Yeah, so kind of circling back to BBBY, we're kind of looking at it a little bit more closely in the chat. So obviously the option market did not get this move right this week. They priced in about $2. So, 20 was kind of their expectation. We're at 35. So they're definitely way off.
Just a little bit.
Just a little bit, just a couple of sigmas. But additionally, one of the members pointed out that there are no current strikes above 30. So if the option market opens with the equities market and we're above 30, the option market is broken. This is kind of like a car scenario where once there were no more strikes above 260, the stock actually squeezed to like 540. So keep in mind, this is gamma related. It's what we discussed on Oxy. Different catalysts, but the option market is set to have some of those breaking models be in factor. And it just means the trade's going to be more volatile. Obviously, the spread's a little concerning, but the spikes are what's concerning to try and short it. So be on the lookout for clear weakness if you want to short it.
This is definitely an aggressive stock this morning, guys. Again, we have it here, but be mindful of your share size and managing your risk on that one. All right, guys, we'll stop here. Why did I pick United? No, they're both really good. American Airlines and United are both. You can pick either one. I tend to like the way United Airlines trades a little bit better, and we can talk more about that when we start doing stocks, the stock levels here after our announcements. And today is Monday, so we do have Crude right after our community events and announcements. So I'm going to bring this over for you, Jared. Let me know if you can see the screen, Jared. Make sure you're able to see the announcements for this week.
Okay. I'll try my best. Okay. I do see our weekly schedule. So Monday technology, looking at swing trade discussions with Brian at 2:30. We have our onboarding class with Carlos at 7 p.m. and then technology at 8 p.m. Tuesday strategy, trade review with Eamon at 12. Success webinars typically on the Tuesday evening at 8 p.m. Not sure what the topic is this week. We'll look at that in just a moment. Psychology Wednesdays and webinars are going to be, of course, at 8 p.m. as well. And then we have Thursday mentoring with Andrew, Eamon, and Ed, 11, 12, and 4:30 respectively. New trader Q&A, I believe, with John at 1, and then following into Friday, crypto with me. So that one's pretty easy. So onboarding, just kind of looking at our sort of standard onboarding for Monday at 7 p.m. Join us there for new traders. This week for technology, we're looking at DOS Trader Pro Q&A with Kyle. This is going to be kind of interesting. If you're getting started with the platform, you have some general questions, you've never seen sort of these layouts before, great place to obviously get started and maybe even ask some of the more advanced questions for hotkeys and just defining your platform. Next week, looks like we're doing trade journaling as well with Kyle. Strategy and trade book webinar for this week. This is the Tuesday session. It's going to be with Mike. How to determine when you move your stop to break even. Really good for sort of extreme traders. If you're looking at high of days, areas of inflection, knowing when to sort of adjust your risk and when to evaluate your trade success and probability. Pretty interesting discussion there. Next week, we have Thor tape reading lesson 3, analyzing the ladder structure. And this one is probably a highly requested and a highly anticipated webinar. A lot of level 2 success in the BBT chat room. So this week for trading and psychology, looks like we have Creda with Mental Edge series, how to identify the negative thinking that causes losing trades. And then for next week with Mike, probabilities part 2, how to employ your trade book edge just like a casino does. So feel free to join us there on Wednesdays. We have our Thursday mentorship, as I mentioned, Andrew at 11. Hopefully he's all set up and good to go for this week as he's been on travel. We have afternoon mentorship with Ed, and then we have our sort of Thursday mentorship in the evening at 8 p.m. Every Thursday. Feel free to utilize the free Variable Trader Stock Trading Simulator at stocktradingsimulator.com. Feel free to provide feedback and comments as to your experience, and obviously check out some of the new features that are currently being developed as they roll out into production. Interested in joining Variable Traders? We do have multiple tiers, and feel free to take a test drive with BBT for 1 week for $24. Do use the code premarket24. And then looks like we have do we still have our Valentine's sale code, the Lovers 50, or is that an older?
Yeah, I think it still might be running, so take advantage for it. They drop it off.
Okay. Perfect. All right. And good morning, Creta.
Morning,
I don't know if
Jared.
we've ever actually, I don't know if we've ever actually introduced each other, but my name is Jared. I think we had one session a while back, but feel free to take it away. I'm kind of subbing in for Norm today.
Thanks, Jared. Hopefully, is my mic all right this week? I don't know what happened last week, but you can hear me okay. Perfect. Okay. So we're actually picking up on the topic from last week because it seemed to resonate with people. And we were talking about how your childhood can impact your trading. So we're going to talk about that, or a strand of that, in a little bit more depth today. So we're going to speak about thinking in patterns and how your default coping mechanisms can actually impact your trading. And this is the crux of trading psychology. So one part of trading psychology is all about enhancing performance, optimizing your mindset and all of that kind of thing. So having good routines, making sure you have great goals, all of that. But the other side of it is understanding yourself in order to optimize how you think, how you feel, and how you act. And that's what we're talking about today, that side of it. So thinking in patterns. When you're trading, you're looking for patterns in the market. So from a technical perspective, patterns are really important. But from the trading psychology perspective, we have patterns inside of ourselves that we carry throughout our whole life. And these become activated when we're trading. So they become activated anytime we're under stress. And they can be helpful or unhelpful. And so the more that we can actually become familiar with the patterns that we bring to stressful situations, the more we're able to actually step in and address anything that's tripping us up in our trading, or to optimize patterns that work well for us. So let's talk about that in a bit more specific detail and make it a bit more concrete. So when we're under stress, our body reacts. So from a very physical perspective, our heart will beat faster, our breathing will get more shallow, we might start to sweat more. So we go into a state of anxiety. And this can happen even if we're slightly anticipating competition, say. So it doesn't always have to be a big, massive trauma or stressor that causes this reaction. So if you think of an athlete about to go into competition, they're probably starting to feel that way in their body. But also you as a trader might recognize this feeling. So maybe you're in a trade and you're holding and you're itching to get out of it, but you're trying to keep yourself in there. Maybe you see your setup appearing and you know that you should be getting in decisively, but you're hesitating. So whatever's happening, you start to feel this elevated level of anxiety in your body. So when that happens, then our coping mechanisms kick in. And depending on your life experience, what you learned as a child, the different traumas that you've gone through in your life, you will have different ways of coping with a threat or a stressor. And so I'm going to just give a few examples of these. So you might identify with being a person who, whenever they're in a stressful situation, they immediately seek to problem solve. So they're right in there looking for the solution, trying to control every aspect of the situation. And that makes them feel proactive and it makes them feel more in control and better able to deal with the stressor. So that can be useful to some extent. But if you're in a trade and you get triggered, so your body starts moving into this anxious state and you're that type of person, then you run the risk of over controlling the trade. So trying to over manage it and possibly jumping out of trades too soon. So that's how a coping mechanism that you employ in areas of or stressful situations in life can actually play out in the market. Or you might be someone who's more like the deer in the headlights type person. So when something stressful happens, you just shut down. So you're kind of frozen and you don't know what to do. It takes you a while to actually face the situation head on and then employ other coping strategies to deal with it. So if that happens you in life, in stressful situations, you might be playing that out in the market by actually hesitating to get into a trade or taking that split second too long to make decisions while you're in the trade. So that deer in headlights is actually happening as you get triggered by the market. So again, these are patterns that are just playing out. So whether it's the market or whether it's stressful financial situation outside of trading or even a fight with your partner, whatever it is, these are your default ways of coping with these stressors. So if you become very aware of what happens to you when you're stressed, and you can look at examples of outside of trading to recognize this in yourself. So if you can identify outside of trading how you usually deal with stressful situations, you can probably then start linking that back to your trading and understanding how that plays out. So if you can understand what your body does when you're feeling stressed, so get really efficient at recognizing when your body is in a state of stress or anxiety, then if you know how you automatically react in that situation, you can start unpicking that. So the very opposite of this is the flow state. So if you think of the flow state where everything's working out in your trading, everything seems effortless, you're just in the zone, you don't even feel like you're exerting any effort in order to stick to your trading plan and to hit winning trades, then you'll notice that the opposite is true in terms of how your body feels. So if you can remember a time where you were feeling a state of flow, you probably were feeling very relaxed in your body, your breathing was calm and deeper, and your shoulders were dropped, and you were just absorbed in what you were doing. So the reaction starts with how you feel in your body, and then it moves into what you do about it. So in terms of the flow state, if you're feeling relaxed and then you're in a trade, you probably find that your mind is in tune with your behaviors and your emotions are all aligned. So you are feeling calm, so you automatically take the right actions in your trade, you stick to your trading plan, you see the results, and the progress just builds from there. So these are the two extreme ends of the scale. So one where you're triggered, you feel anxiety, and you go to your default coping mechanisms that aren't helpful to you. And then two, where your body is feeling relaxed, stress-free, calm, and then you automatically choose all the right behaviors and actions to take in order to successfully execute your trade. So if you want to actually work with this, well, the first thing to do is to become laser focused on how your body feels. So get really familiar with knowing when you're in a state of stress and when you're in a state of calm, and then use techniques to actually manipulate that while you're in the market. So you can use really quick breathing techniques to bring your state of anxiety in your body down. So the actual physical anxiety that you're feeling. You can use progressive muscle relaxation, breathing, even like a quick visualization of kind of 10 seconds. So even imagining yourself on a beach or something like that to just bring that state down. So that helps you to maintain more of a flow state so that you can then use all of the positive coping mechanisms. But the second piece of it is to become very aware of what you do when you're under stress and you do automatically, and then try and disrupt that. So if you know that you're somebody that over controls, well, then try and put some strategies in place that remind you to understand that this is what happens when I'm stressed and it doesn't work for me, so I need to do something different. So the first thing to do is be aware of what happens to you when you're stressed. And if you're the other person that tends to actually freeze under pressure, then you know that you have to recognize when that's happening for you, and then you want to implement a strategy that helps you to become more decisive, to take more efficient action when you're under pressure. But basically, the whole crux of all of this is to understand the patterns within you that are triggered by the market, and then to work within those to select the most helpful pattern that will support you in your trading.
All right, excellent. And as you were speaking, I was thinking about some of the more precision entry type trades, the ones that are typically a one-off entry and an opportunity in the moment. Those tend to be some of the most stressful for me, typically because I'm trying to enter with precision. I'm trying to be as clear cut in the goal of the trade, and I do find my heart rate elevates. I do have to breathe through the trade. It's one of the more challenging setups that I currently encounter. So I'm looking forward to maybe employing more breathing when entering and in the trade itself, because the targets are usually very attractive.
It's a really powerful strategy, and it's so quick to implement. So it's definitely something I'd recommend people try out if you're not already doing it.
Awesome. Well, thank you so much.
Thanks, Jared. See you.
Bye.
All right. Thank you. Oh, sorry, I was on mute. Thank you, Creator, for that. Appreciate it very, very much. All right, guys, let's take a look at our watch list. So far, we have BBBY, we have Oxy, I have United Airlines here. Again, Dan was asking me earlier why I prefer this one over American Airlines. But again, you can go with either one. American Airlines also looks good as far as volume, down 2.5. Their pre-market action a little bit choppier right now, but they got the volume. They can trade very, very clean if we pick a direction. United Airlines just seems to be a little bit cleaner. It's a little bit more slower pace moving. But when it is in play, it's a good one as well. So either whatever you like on that sense, you can select there. So I see a lot of thank yous coming over for Create over on YouTube. Thank you so much. Make sure to hit that thumbs up and show your support for her. Appreciate it very, very much. Okay, so let's get to our watch list. Let's do some levels here. As far as our secondary list at the moment, we have Tesla is looking good. CCL also very active, 1.1. American Airlines we talked about just a bit ago. Plug not doing a whole lot. It is up 3.5. We just need a little more information on this one. I think Uber could be interesting today. This might be one, two, three, four, five, six. Uber might be the sixth one. They don't, they're hit or miss. I've seen them trade very well, and then they can also just really just be very crappy and choppy. But let's see what they do today. And then we have Indo, of course, here, which has been just insane. Look at the run they had on Friday, 22 to about 50. This morning already hitting the highs of 57. Right now, giving some back, coming down to the previous day close. But this one could be extremely active, and just be careful. I do have it here on my risky pile because it is a low flow, by the way, right? I think it's sitting at 1.5 million shares flow on that one. Trader, what I think about Apple, you know what? We didn't look at our regular Apple, Nvidia. Those are usually pretty good. Apple looks great today. I mean, 1.1 million. They're looking to go green. They were down quite a bit here. So they're getting a bit of a pop this morning. Yeah, Apple, I'm sure probably Nvidia will be on that list. Um, AMD also looking good as well. Let's see here. You know what? Uh, the tech
Yeah,
sector's looking good. Yeah.
the entire market just basically went back to previous day close. So this gap down has been, at least from the move, negated by the rally this pre-market.
Mm-hmm.
I'd be looking to see maybe some of the key driving stocks of the S&P. They might be in play today, like the Apples, a little bit of
Yep.
tech,
Yep.
maybe some of the higher risk communication stocks, Facebook. If we get a bid in the whole market, then those definitely will have some range.
I agree. I just do there's some shuffling here. I actually added Apple. I took out Uber because Uber could be choppy. I think it still is in play, and we got to take a look at it. It is up 3.1, 1.1 million. So not completely dismiss it. And I added AMD because AMD looks decent as well. So I got those back on our list there. But Apple, the one that I'll keep a close eye on when it comes to tech, just as you mentioned, Jared there. All right, let's get to levels, guys. Let's go over here, hop off to BBBY, which again continues to getting a little pullback, but just continues to make new highs after every pullback here. We had a couple here, nice pops to 33, then again here 31, nice pops to 35, and now down to 32. Can it continue to do these pullbacks and still keep holding on to that 9 moving average? We will see. 35.14 is the high of the pre-market, and we have not been here since looking at May, July timeframe, right? So there's a couple of levels here. We do have 39.22. It's funny, the last time we were here, you could see how crazy this was acting. We're getting one of those type of days again, 44.39 all the way up here as well. And then towards the bottom, I like this 31 level. You can clearly see area support and resistance right around that area. So I'm definitely going to be marking that one down. And then towards the bottom, guys, this thing has a big run. So we are going to have a lot of levels within the high and low of the pre-market. I like this one here. There's two levels here that stick out really quickly. It's going to be this one here, 28.87. Might be 29 if we dive in a little closer, but 28.87. And also down here, 27.28. I definitely like these two levels on this daily. They're very, very clear. If you draw lines here, we'll draw one right on there, 31. We'll draw right on here, 28.87. And then one down here, you can see how nice this this daily has been trading around that. So and if you look at our pre-market action, you can see those prices have also played an important role this morning. If you have those on, you can see that there. See how the support and resistance and the breakouts are happening right around these prices. So definitely interesting there. All right.
And I'd keep an eye on the 30 print until the option market updates. That is the highest strike that was offered for the week. So 30
Yeah.
definitely
Yeah.
psychological and has some option kind of
Well,
support around it.
I'm gonna add that there as well. So we got 30 just in case, guys. Um, definitely interesting. Again, it's getting extended, but with everything behind it, who knows? What anything is possible with this thing here. Here is Oxy dropping down, not only up 4.8. Let's take a look at the daily and get some levels in here. We had a hell of a run on this one the last couple of last week, really. You see some really nice pops here. Some of them even nicely $5 pops easily. High of the pre-market 63.94. Your low of your pre-market right now is at 58.50. So it's should be down over here. right over here, 58.50. We're coming down towards that now. Let's see if we're going to be testing that. Towards the bottom, guys, highs and lows from the last 2 trading days. I don't think you need to add anything else. And then if we scroll to the left here, are we all-time highs on Oxy? We might be, actually. Are we?
No, I think there are higher prints way back in time. This is a
Oh,
relative
yeah,
high, but it's
20.
not an all time.
Yeah, 2018. So we're really going back here. 2018, we got a couple of stuff here. I'm gonna mark a few that's just stick out. We're not gonna go crazy here. 67.84 is good. I'm not gonna look for anything in between here. You might find something in between here. I'm gonna stick with the ones that are really, really obvious. Like this one here is obvious. 63.96. You can see a little bit of action there as well. Maybe. I actually this was pretty obvious here. 65. That's pretty clear. And that's it. That's all we'll do. We'll get a couple towards the top there. We're not gonna go crazy on that. So that's Oxy right now, guys. Great action. A lot of volume this morning. Here's United and American Airlines both in play, guys. You can look at either one. I'm gonna look at United. If someone looks at American, great. Call it off. You see something great happening there. 35.12 is the low of the pre-market at the moment. 35.10 to be exact. And we're coming up against the highs here at 36. So I'm just going to mark down 36 here. I think that might be a good level to even keep on here. Even if we do make a new pre-market high, I think this area is going to be good for them. Now, as far as looking at the daily bigger picture here, we do have your highs and lows right there doing a good job. You can see every time we got to 40, right, we found a way to bounce back pretty nicely, actually. That's 40 seems to be the number. We lost that on a Friday here. Nice big drop as the market sold off. You guys remember that. Let's go over here to the left, and we haven't been here since 2020 looks like. Just going to pick a couple of levels towards the bottom in case we do decide to take a dive here. 34.13, and then down here also we have 32.85. Towards the top, I only like this level right now, the 37.27. I really like this more for a drop here, but it looks pretty strong right now. So we'll see what it does. Baba this morning, great volume, guys. 2.2. It is down 1%, but it has climbed its way out of some lower numbers here. 97.30 is the low of the pre-market, already at 99.70. So it had a nice gap down. It's been able to recover a bit here. The high of the pre-market right now is exactly at 100. So we'll put a level there. And then once you do these two levels, you look at the picture here. I don't think you need to add anything else. You're pretty much set. Highs and lows from the last 2 trading days. Maybe a level towards the bottom. If we go back and retest that low of the pre-market at 97.30, man, we haven't been. That's the 52-week low for sure, and we haven't been down here in such a long time. Man, we're going back.
Yeah, Baba can't find its footing anywhere.
This is oh no, it's not a time low. Okay, I thought it's not gonna go back anymore, but no, there is something here. Wow, 2016, 2017, 86. I'm just gonna mark down 86 here. These levels here, I mean, they're so old at this moment. They still might do something. Who knows? We'd be surprised how well these levels maintain. I'm just gonna pick a few. 94, might be actually 95. And then we'll keep 90. We'll actually keep the whole dollars. We're so far out now. I think if we do start dropping below that 97, the whole dollar price is going to be actually probably more interesting than the levels. We'll see. All right, here's NEO, 1.5 million, recovering a little bit this morning. Low of the pre-market, 17.62 level there. You got a little bit of a base here, so I'm going to mark this down, 17.92, because you got a little bit of some stuff happening there. I actually sometimes prefer this a little bit more over this one candlestick just coming down here very early in the open, right? So you got the 4 a.m. open, and you got this action happening. This might actually have more weight to it, right? Because you see more happening there. So 17.92, we'll keep that on deck. And then towards the top, guys, highs and lows from the last 2 trading days. Wow, 917. We are running slightly behind. Just notice that. We're going to get to our moderators watch list in just a second. Let's do Apple last here before we get rid of it. And Apple at the moment, low of the pre-market, 159.60. Right now, slamming up against the previous day close, trying to go green. Towards the bottom, we have this big drop here a couple of days ago, 152.23. And I think you're pretty much set. Got a couple of days here around 157. Not great. The 159 is really where the action is at here, right? That 159. These are kind of a little bit all over the place there, but that 159, you could clearly see the support happening there. So AMD and also Nvidia look very active as well. You can watch either one. I'm going to keep Apple as a tech company for today. All right, guys. If you haven't done so already on YouTube, please hit that thumbs up. I really appreciate it. We like to be between that 250 and 300. It's a great number for us. So thank you for your support. As you guys do that, we are going to bring in our moderators lineup. Jared, we'll start with you. What are you watching this morning?
Well, BBBY sounds pretty good. That thing is moving in both directions, and I just caught the bounce below 31, so I'm looking pretty good right now.
Very nice. Very nice.
Oxy is definitely on watch all week, and I'm probably going to keep some of the travel stocks. They're not the most volatile names, but they do have sort of a rationale for breaking down. Watching the broader market, though, if we do catch a bid off of this gap down and it's being bought so far, I do want to kind of play the market sentiment overall, bullish over bearish. So.
All right, excellent. Thank you, Jared. All right, let's take a look here. Eamon taking off today, not a clear direction. We'll wait for alerts. Dima is looking at Oxy, Baba, BBBY, Apple, Tiffany, BBBY, and Oxy. Secondary list Tesla and Baba this morning. Thor is looking at the overall market, Baba and Oxy on his list. Susan, Oxy, Tesla, United Airlines. Secondary list Baba, AMD, and BBBY this morning, which is very, very active, guys. Just insane action there. And Brian will be trading live with you this morning, looking at Oxy, BBBY, Gilead is Guild there, Uber, and FCX on his list. So, guys, that is what we have. Thank you so much for joining us over on YouTube. We appreciate you guys very, very much. Jared and I are going to go over to the chat and continue there. If you haven't done so already, you can also sign up for our onboarding class and get 7 days access to our community and see what everything is about. And join our onboarding class tonight at 7 p.m. with myself and Mike. We'll go over a couple of things to get you started. So thank you so much for joining, guys. Jared, thank you so much for covering for Norm today. And we'll see you guys tomorrow.
You're very welcome. Take it easy.
Take care, guys.